To understand platinum's position today, we need to go back in history. Platinum is, without question, a fascinating metal. It is far rarer in the Earth's crust than gold. For centuries, it was so difficult to refine that it was almost unknown to civilizations. Unlike gold and silver, which humans have used for thousands of years, platinum only became widely recognized in the 18th century. By the late 20th century, platinum's rarity made it a luxury symbol. Jewelry brands marketed platinum as superior to gold, stronger, shinier, and more exclusive. Wedding rings, luxury watches, and high-end jewelry houses pushed the narrative that platinum was for the elite. The result? Investors believed platinum wasn't just rare, it was destined to be the metal of the future. At the same time, industrial demand was booming. Platinum is a critical component in catalytic converters for cars, helping reduce emissions. As auto industries expanded, demand for platinum skyrocketed. That demand, combined with its rarity, drove prices to astonishing levels. There was a period when platinum traded at double the price of gold. Imagine that. The so-called king of metals, but gold, being overtaken by a new challenger. For many investors, this was proof that platinum was the future. But here's the problem. Platinum's strength was never truly as an investment asset. It was tied to industrial demand, not to centuries of monetary history like gold or silver. Its value depended heavily on how many cars were being made, not on its role as money. And as history shows, once demand shifted, the illusion of platinum as the ultimate investment began to collapse. Why platinum struggles as an investment? Let's get to the core issue. Platinum is not a reliable store of value. First, liquidity. Gold and silver are traded everywhere. They are universal. You can walk into almost any country in the world and exchange them for cash. Central banks hold them in reserves. Jewelry markets thrive on them. Coins, bars, and bullion are easily bought and sold. Platinum? Not so much. Very few central banks hold platinum. In fact, almost none. The market for platinum coins and bars is tiny compared to gold and silver. That means if you want to sell physical platinum, your options are limited, and the premiums can be brutal. Second, recognition. Ask anyone about gold or silver, and they know what you're talking about. These metals are woven into culture, religion, and history. Platinum? It simply doesn't carry the same weight. For many, it's just another shiny metal. Third, volatility. Platinum prices swing wildly because demand is tied to industries like automotive and even hydrogen fuel cell technology. Its price is more speculative. When auto demand drops, platinum suffers. That means you're not holding a store of value, you're holding an industrial commodity. And that goes against the very philosophy of precious metal investing. The whole point of buying precious metals is to own something stable, outside the financial system, something that holds value through wars, recessions, and inflation. Gold and silver do that. Platinum does not. Current price analysis. Now let's look at what's happening today. As of now, platinum trades about $1,370 per ounce. That might sound high, but remember, it used to trade far higher. During past rallies, platinum surged to $2,000 per ounce, only to crash back down as demand faded. Analysts believe that in the next precious metals rally, platinum could indeed climb again, potentially past $1,600 per ounce. And that might sound exciting for investors. After all, a couple $100 in price gains could look profitable. But here's the key. In the same rally, silver could soar past $50 per ounce. That's right. Silver, which trades for much less than platinum today, has far more upside. Why? Because silver benefits from both monetary demand and industrial demand. It's used in electronics, solar panels, medicine, and more. At the same time, investors flock to silver in times of financial crisis. The gold, meanwhile, continues to act as the ultimate safe haven. When banks fail, when currencies collapse, when inflation runs wild, gold holds its value. That's why central banks across the world continue to buy gold, not platinum. So while platinum may rise, it is unlikely to outperform silver or gold. Its rallies tend to be shorter, less reliable, and more dependent on industry. For long-term wealth, platinum just doesn't stack up. The philosophy of precious metals. This is perhaps the most important part of the discussion. Why do people buy precious metals in the first place? It's not just for profit. It's about security. It's about having something real, tangible, and outside the control of governments and banks. When you hold gold or silver in your hand, you hold centuries of trust, history, and universal value. But platinum doesn't fit into this philosophy. For one, physical platinum is hard to acquire. Not every dealer carries it. The premiums, the added costs above spot price, can be huge. And when it comes time to sell, you might find it far more difficult than selling gold or silver. This defeats the whole purpose. The main idea of precious metals investing is to have something physical, something universally accepted, something you can rely on in a crisis. Platinum simply fails that test. That's why, despite all the hype, platinum has never been the cornerstone of wealth protection. Gold and silver remain unmatched in that role. Why gold and silver win gold is timeless. It has been money for thousands of years. Every empire, every nation, every culture has recognized its value. It is liquid, trusted, and stable. Silver is the underdog with explosive potential. It is both an industrial powerhouse and a monetary asset. When demand spikes, silver prices can skyrocket, like we saw in 1980 and 2011. And with growing demand in renewable energy and technology, silver's future looks brighter than ever. Platinum, by comparison, feels like a side bet. Yes, it might rise during rallies. Yes, it has unique industrial uses. But as an investment for security, stability, and wealth preservation, it simply cannot compete with gold and silver. So, should you invest in platinum? The answer depends on what you're looking for. If you want speculation, short-term opportunities, and exposure to industrial trends, platinum might have some appeal. If the next rally takes it past $1,600, you might even profit. But if you're looking for security for true wealth preservation, platinum is not the answer. Silver could easily soar past $50, offering both profit and utility. Gold will continue to stand as the ultimate safe haven. Platinum might be shiny. It might sound exciting. But when it comes to investing in precious metals, history is clear. Gold and silver win. So before you buy, ask yourself, do you want speculation or stability? If this helped you see things differently, drop a comment and I will answer your questions. Subscribe for more honest finance content. And remember, smart money doesn't sit. It moves.